Hi there boys, welcome back to CRTverse. In this video, I'm going to show you my pre-market analysis for the current week and also my overall narrative for the week as well. Okay, so let me break down the pre-market analysis in simple terms and now so that you can understand clearly without any noise. All right, if you are watching this video and if you are new to our channel, please subscribe to our YouTube channel. And if you want to have some CRT entry CRT entry models, entry and exits, whatever shit, the image, the execution video in all together in sequence, please feel free to follow me on Instagram. My Instagram name is CRTverse as well. Okay, all the links are in the bio or in the description of this YouTube video, so please make sure you're gonna follow me on Instagram and X as well if you want. Okay, thank you so much. Let's dive into the video. All right guys, let me go from the HTF. Let's start from 3 month. Okay, usually I go from 3 months and then 1 month and then week. Okay, that is my sequence. This is the 3 month chart now. What you are seeing, the previous 3 month candle total swooped the previous range high, right? This is the range, low and then high. It's a range, right? The previous 3 month candle total swooped the old highs and also in the order block as well as in the rejection block, right? You can either choose the order block aligned with the rejection block or any of it, right? It's up to you, right? Let me choose the rejection block because the order block and then the rejection block are close together, right? So it would be not a problem since both are together, right? So let me choose the rejection block in this case. If you want to choose the order block, definitely you can. As I said earlier, they both are grouped together. Okay, all right, now what you are seeing, the price, the previous 3 month candle digged into the rejection block, which is our key level, and then what the price did, it gives the proper rejection when it went into this key level, which is the rejection block aligned with our order block, right? This is 3 month time frame, guys, so pay attention. Now what we have to see, the price is rejected from this key level, but that doesn't mean it will go down just because the price hit the key level. What we have to look inside the key level, liquidity pools. We have to make sure whether the price cleared all the liquidity pool inside this key level or not, because liquidity pool is must, right? You can mark any random order blocks or rejection blocks, fair gaps, whatever, etc. But you have to make sure that the liquidity pool must be taken which presents inside the key level. All right, this is 3 month chart. The time frame alignment for the 3 month is 3 day, right? Because we are using 1 day time frame for monthly. So for the 3 month now it's a 3 day. So I'm gonna change the time frame into 3 day time frame. Now I have to look whether we took the liquidity pool or not. Okay, can you see the liquidity pool inside this key level, guys? This high itself is a liquidity pool, right? Because it is inside the key level, right? And then let's see from the left side what we have. Another swing high inside the key level, and the price took that already, right? So now we are bullish. Okay, no, sorry for my tongue is twisting. Now we are bearish, right? Because the price beautifully rejected from the key level and took the liquidity pool, and then bang, a rally. We also shifted the structure, right? Look at this. Market structure shifts in 3 day time frame, right? So we are bearish, and this buys are the deep retracement for sales, okay, which is a counter trend. All right, now let's see our next DOL. Now we identified that our bias is bearish, right? Because we are inside the 3-month period, right? And cleared the liquidity pool as well. And the price properly gave us the shift in the market, which is the market structure shift. And it went deep into the retracement, right? What do you see here? Model 1 for a 3-month candle, right? And price beautifully tapped that model 1 candle and then started reversing. So we are bearish. Okay, what is our next DOL? Let's go back to 3 months time frame. And now, as you know, the price moved from one key level to another key level, right? Which is internal to external, from one liquidity pool to another liquidity pool, right? That is common in every time frame. That doesn't matter even if you are framing your trade using the 4-hour to 15-minute or 1 day to 1 hour. That doesn't matter. The price is fractal. It always looks same in each and every time frame. So for the 3-month, we have another key level below this low, which is our 3-month fair value gap, right? We have a 3-month fair value gap aligned with an order block, right? So this is our next DOL. What I'm expecting is the price to reverse, the price to hit this fair value gap, at least 50% of the fair value gap, and the order block as well. Okay, this is my narrative in HTF, which is 3-month. Now let me remove all the diagram shit. Okay, now let's go back to 1 month. What do you see here, guys? Price already took the high, which is our liquidity pool in 3-month time frame. And now if you closely look at the shit, we have an SMT with GBPUSD with monthly highs. The highs and lows of the HTF time frame are the major liquidity pool, which will cause the price to change its direction towards the opposing side, right? Now, if you go back to the GBPUSD, you can see it, right? The current month of GBPUSD took the previous month high, which is an SMT. And now let's come back to EUROUSD. Now you understood we are bearish, and our next DOL is the 3-month fair value gap. Okay. Now let's reduce the time frame to 1 week. And what you can see now, we have another SMT with GBPUSD, which is from previous week. From this week highs, right? GBPUSD took this high, where EU failed to took the high. That is an SMT, right? Monthly cycle SMT, and this is an quarter cycle SSMT. Now what we have to do is go back to GBPUSD and confirm that, right? GU took this previous week high, where EU didn't. So which confirms bearish signature. And then important to close is the candle closure. We closed below the previous week candle, right? So close below equals lower prices. Obviously our bias for the next week might be bearish. Okay, what I'm expecting is open high, low, and then close. That is my next week narrative. This is what I'm expecting for the next week. Okay, we closed below, so our bias is bearish. So what I'm expecting is, let me switch the time frame to 1 day. Above this sequence of down close candle, we have an SMT, and then what you can see here in daily time frame, we have model 1 as well. The price took the previous month high as well. So for a monthly CRT, we need a model number 1 in a daily time frame, and the model number 1 formed as well. And what we have here, the true market structure shift, right? The true market structure shift confirms that the price is bearish. So I'm going to expect some bearishness for the next week. Okay, obviously the price will go down, but it do not strictly go down all the way, right? All the way down, right? To go down, the price must push its direction towards the higher and then lower, right? Because the bearish candle will form as open, high, and then low and close, right? So let's do some shit right here. This is our model one, right? Let's the price must come above, right? Come above, right? Let's do some fib. We must have to focus our sell only in that premium, right? Now I'm expecting the price to come up. If the Monday I took this low, and I will expect buy for Monday until the price comes to this fair value gap or the 50% of the fib, right? So what I'm expecting is if the price took the previous low or an SMT with GBPUSD or GXY, I will look for buys in the key time until this fair value gap or this 50%, right? And then targeting lower. So the first target is the previous month low, right? Because we have the recent total soup, right, in the previous month highs and SMT as well. So the next DOL is this monthly low and then the 3-month fair value gap or order block, whatever. For this week, this is our potential DOL, right, which is easier for the price to take on first. So this is what I'm expecting. So alright guys, that's it. This is what I'm expecting for the next week to happen in EURUSD. As if someone new guy are watching me, hey bro, why are you not showing any other currency pair or gold or Nasdaq, whatever? I am not a commodity trader. I'm not a indices trader. I'm not a crypto trader. I only trade EURUSD for the past 2 years. I built every single shit which made me profitable only in EURUSD. Obviously the charts are same in each pair. Anyone can milk any other shit on the pair that they are using for so many years, but I'm comfortable with EURUSD. That's why I'm only focusing on EURUSD. The main goal of the trading is to make money. No matter, hey bro, I made a couple of bucks in gold. Another guy saying, hey bro, I made few bucks in EURUSD. That doesn't matter. The goal is to make money, no matter what pairs that you are trading, because the charts are going to look like same, right? Because the price and the time are fractal, so that will look same in every pair or every asset or every other shit, right? So that doesn't matter. I only trade EURUSD and USD CAD sometimes. If Euro is not fucking clear, I will go back to USD CAD and then look for some trades. Only if Euro is not clear, okay? But 90% of my trades are from EURUSD, and that is my best pair ever. Alright guys, I hope you find this video as insightful. Thank you so much for watching this video until the end, and until then, bye guys. See you in the next video soon. Until then, bye again.